Hey everybody, I hope everyone's doing well and had a good day. This is the overview of the Emini 5-minute chart for Monday, November 18th, 2024. So it's the start of a new week, and here is the weekly chart. Several legs up, we have this big buy climax bar late in a rally, getting lots of overlap through here and here, and then we had bad follow through on the bull trend bar. So more likely, this was an exhaustion gap. Exhaustion doesn't necessarily mean trend reversal, so it doesn't necessarily mean the bull trend converts into a bear trend. But it does mean it's a pause in the bull trend, so we may go sideways for several weeks here. The bears want to get to the bottom of the buy climax, so the bears are trying to get down to this red line. The bulls, they are hoping that this is just a 50% pullback of the rally, and they'll buy here looking for a new high. For the daily chart, same idea. We have this rally, and we had this endless pullback by the bears. But look where we are. We're at the midpoint of the rally. So there's going to be support here. There's going to be bulls buying, bears taking profits. We may have to start going sideways here. The approach down to 50% may have been stronger than bulls would have liked. But so far, the bulls have done a good job disappointing the bears here at 50%. The question is now, do we go to the bottom of the buy climax, or do we go to a new high? Seems like a trading range, big up, big down. The bulls want a second leg up, and the bears want a second leg down. So we might be in the middle of a trading range here, so I expect a lot of trading range price action over the next couple of days at least. And then here's the 5-minute chart today. Pretty tight trading range on the open. However, you'll notice we have higher highs and higher lows, so we actually have a bull channel. Then we got tight trading range on the open, and I will also add that the Globex chart was sideways going into the day, so I was fairly 50-50 for the direction on the open to either direction. But in this case, we got the bull breakout on 7, and look at 7 compared to these bars. 7, it's a big bull bar closing on its high. A lot of space between the prior bar's high, and then the next bar's low, so that's a gap. There's a gap between, when bar 7 closed, a gap between the high of bar 6 and these highs. And then with 7, or with 8 and 9, the gap stayed open. The lows of these bars did not overlap down here. So there's a lot of space. We've trapped traders below. Betting this is a trading range. If you sold, you got trapped by bar 7, and if you did not buy, you were trapped out with bar 7. So bulls expecting a second leg up. A little bit of a surprise, but can be difficult to get long when it looks like 3 or 4 legs up. So proceed with caution. The bears had 2 reversal attempts. They tried to sell below bar 8. They failed. Tried again below bar 10. Failed a second time. So when the market tries to reverse a couple of times and the attempts are weak, lacks big bear bars and trendline breaks, the bears may just give up and look to sell higher, and the bulls will start to buy aggressively. So we have a high 2 buy above bar 11, which led to a strong rally, 12 and 13. 13 a little bit bigger than 12, so maybe a little climactic, but strong enough breakout. Traders are expecting a second leg up. And then you judge the strength of bar 14. Is 14 enough to reverse this 3-bar micro channel, especially bars 12 and 13? Probably not. So traders will buy below this bar, they'll buy above this bar, buy the close, buy for any reason, expecting the rally to get a second leg up. Let me just add Friday's high. And I'll add Friday's low as well. And if I refer to the prior day as yesterday, it's Monday. Yesterday means Friday when it's Monday. The reason I draw these, the prior day's support and resistance is important, the prior day's high and low, because they act as support and resistance, just like any other bar on any chart. So as traders, we want to watch what happens when we test the prior day's low or the prior day's high. And the expectation here, we have a big bear bar on the daily chart, so probably sellers above. There may be sellers below, depending on the context, but we know that it's a 50% pullback of a rally. And in this case, we never got to the prior day's low, and we just started rallying up. So with this, it looks like we're going higher. Tight bull channel, may have reset the leg count, may have been a wedge here, but now getting a bull breakout. Lots of space and time between these bars. So the bars to the left have less of an effect the further they are to the left. We have a breakout point that's important up here, maybe bar 2, where we broke out on Friday. So probably sellers in this area. But since most bars are breakout bars and markets are fractal, so that includes most bars are breakout bars regardless of the time frame. So even on the daily chart, most bars break out of the prior day's high or low. It looks like we did not reach the low, and we're rallying, so we may have to reach the high of the prior day. So by the way, the reason this looks a little off, you can see if you use the Globex chart, this bar looks bigger, this bar a lot smaller, but here's the day only. So you can see we came close to Friday's high, but we didn't quite get there. But anyway, traders will buy for any reason, expecting higher prices, high one buy, getting follow through, and then weak reversal attempts. Bad sell signal bar 17, buyers below. Another bad signal bar 20, buyers below. Tight channel, yes, maybe 3 or 4 pushes, 1, 2, 3, 4, but overall tight bull channel, so not ideal to be looking for a top, probably going higher. Bull breakout 23, and then 24, look where we reached. We reached a couple of resistance areas. There was the breakout point on Friday, and then look at the bodies of bars 12 and 13. That measured move, we got really close to that as well. What about selling 24? I would not. It's still a tight bull channel. So 24 represents more profit taking. It's bulls taking profits, and the bulls selling out of longs more than it is aggressive bears beginning to sell. But 24 is a problem because you would buy the closed bulls on 23, disappointed with 24, so the upside might be limited, maybe sellers above 24. And then we raced up on 25, but then a smaller bar, 26, and then an even smaller bar, 27. On a smaller time frame, this is likely 3 pushes up, 25, pull back, 26, pull back, 27. And above 24, it was a bad buy signal, probably going to retest the high of 24. And we're also getting far from the moving average, and as soon as the momentum starts to fade, the bulls will stop buying and look to buy lower. And when you see a big bull bar followed by a smaller bar and an even smaller bar, that's a hint that the momentum is slowing down. 28 bear surprise. 28 may have been enough to flip the market to always in short. It's a big enough surprise, probably going to get a second leg down. If you're long for any reason, I think it's reasonable to get out below 28 and then follow through selling on the next several bars. So again, strong enough breakout for a second leg down. Traders are trapped above 27 was a bad stop order sell. Any trader who bought below this bar or did not sell below this bar, they're trapped above and they're looking for any bounce so that they can sell. Bad buy signal 30, sellers above for a second leg down. Low 1, but maybe just a scalp before a deeper pullback because we're testing the bottom of a channel. Spike, pullback, channels evolve into trading ranges. We're getting close to the bottom. So 33 is a bar that bears probably exit above, and bulls can buy, but it is a fairly tight channel down. So again, this 28 through 32 will probably need a second leg down, but okay to exit shorts above 33. We continued sideways. The bulls got a rally, 33, another rally, 35, pause, another rally, 38. That's 3 pushes up, possibly a wedge bear flag after this sell-off. We're testing the top of this channel, 28 spike, implied pullback 29, starting the channel phase, channeling down, and the channel evolving into a trading range, so probably sellers up here. And then 39, maybe beginning a second leg down. The danger for the bears here is second leg trap. 1, pullback, 2. Overall, looks like a trading range, testing support. Then we started going sideways through here. 42, strong enough bull bar to expect a second leg up, but same problem. Could be a leg 1, pullback, leg 2, second leg trap to the top of a trading range. So traders, rather than buying up here, might prefer to buy a pullback. So bad follow through, 43. Bulls tried for a high 1, they failed. Now maybe a high 2, 45, but failure again. And then we tested the breakout point. The 41 high, we tested it on 47 and we bounced. There were buyers there, but then no follow through. So bulls maybe just give up on the trade and we may have to go lower to find buyers. Again, overall, looks like a trading range. So traders will buy low and sell high. We're selling off. We're getting a micro channel, 4 bars down without technical pullbacks. The highs are at or below the prior bar's high. And then 51, bear breakout, minimum follow through, bar 52. Strong enough bear breakout that it should get a second leg down, but it could be leg 1, pullback, leg 2, and overall. Look to the left. It depends on where you begin the rally. But if you start here to the high of the day, here's 50%. We're testing just about 50% of the rally. And again, it's 2 legs down. So a possible second leg trap. We're also testing the high of bar 11, where a breakout occurred, 12, 13. Traders were trapped here. So imagine if you're a bear. You said, yeah, I don't know, maybe it's 3 legs up. These bars look climactic. Big sell-off Friday. This looks like a wedge, bear flag. I'm going to sell here, betting the bull breakout fails and we reverse back down. And then you get bar 12. And 12 traps you, and 13 traps you even further. So bears are exiting here, driving the prices up. But anyone who sold here obviously got trapped. And if a bull did not buy here, they were also trapped. So the bears trapped into a losing trade here. The bulls trapped out of a winning trade. So what are they going to do, both bears and bulls, when we get back to this price? Leg 1, pullback. Leg 2, testing that price. Bulls who missed the buy have a chance to buy, catching a second leg of this rally. And the bears who sold, desperate to get out with a smaller loss or at break even if they can. So probably, you need momentum here. So 52 was minimum follow through, and this is still strong enough for a second leg. But overall, it looks like a trading range, and breakouts in trading ranges get deep pullbacks, and the second legs are more delayed than they are in a trend. Over here, trending, you get second legs quickly. Over here, trading range, leg 1, prolonged pullback for about 20 bars, and then finally leg 2. And then again here, this leg will likely get a second leg down. But then you get 54. Big down, big up, big confusion, trading range, price action. Now the bears and the bulls need second legs. The bears want a second leg down. The bulls want a second leg up. We're testing a tight trading range over here where bulls were trapped on the downside breakout. So bulls will look to exit up here. Bears can sell for a second leg. But 52, the high of 52 will likely be support. So 54, good bar for the bulls, should get a second leg, but then we stalled on 55. 55, I think of 55 as a momentum killer because there's an argument to buy here. Big rally, two-legged pullback. The bull's looking for a second leg up here to test the high of the day, or maybe at a minimum, maybe the breakout point, 27 low. So it makes sense, and you can buy the close 54. But then 55 warns you that bulls are not buying. The bulls buying closes here want a duplicate bar. They want 55 to look like 54 and to close way up here. But instead, we went sideways. So a lot of bulls might exit. And again, bears looking for a second leg down may look to sell here. 56, bear bar, closing near its low. And like I said, this is likely to get a second leg down. This rally likely to get a deep pullback. So we may have to test lower before we bounce. So we get a little bit of a vacuum, 57 straight to the 52 high. Consecutive bear bars, but lots of overlap, not really breaking out of this swing point. So looks like a strong breakout, but context is not great. We might be low in a trading range. And then we're losing momentum on 58. A little bit more momentum, 59, but that means leg one, pause, leg two. We're testing an area where traders were trapped before. Bulls missed the buy down here, and any bear who sold down here and got trapped on the rally will probably look to buy back shorts. We start going sideways, bears losing momentum, and the danger is that we're at the bottom of a trading range, and 52 through 54 will get a second leg up. The low of bar 55 becomes resistance. Bull breakout, follow through, probably going at least a little bit higher. More follow through, and we rallied back to the top of this swing point. But the upside here is probably limited. Looks like a trading range. It also might be a bear channel. So we're testing a bear trend line, and we have lower highs. So even though this rally is 4 consecutive bull bars, look at the tails. So those tails are indications of pullbacks on smaller time frames. Rallied on 62, pulled back. 63, pulled back. 64, pulled back. So this is already maybe 3 legs up. On a smaller time frame, 2 legs up here. So might be more resistance up here. 66, disappointing for buy the close bulls. They may use 67 to exit disappointed, and the upside here again might be limited. Low 2 below 68, bulls might exit, even though it's a tight channel. Context is okay for a reversal. We're getting lots of overlap here. The prior 4 or 5 bars heavily overlap one another, so tight trading range. With lots of trading range price action through here as well. So traders are buying below bars, selling above bars, limit order market. Probably sellers above 69. We came close and then sold off 73. But 73 going below bar 70, and that might be an expanding triangle. 1, 2, 3 pushes down, probably buyers down here. Bear breakout, but bad follow through. And then a high 1 or high 2, maybe even a high 3 on a smaller time frame, 75. So bulls might buy. Decent bull bar, but now you're in the middle of the trading range. And then second leg down, 1, pullback, 2. But probably buyers down here, maybe 50% pullback of the rally, and then vacuumed right back up. And that's just typical trading range behavior. Big down, big up, big confusion. Only a couple bars left in the day, and here we basically went sideways. I took a few trades today. I had trouble getting long here. Looking back, I think I would like to buy below bar 8, but I didn't get long in here. I ended up buying above 14, bought more in the close of 15. I took some off here. I'm sorry about that. Give me 1 second. I think I took part off here, and then I know I took part off on bar 24 when we reached, I used the measured move of 12 and 13 to take partial profits there. And you can see we didn't quite reach there, but this is the Emini I was trading the SPY, and I put my target 3 cents below the actual measured move projection price to give me a better chance of being filled. So I took some profits on 24, and then I thought 24 would disappoint the bulls who bought the close 23, so I took the rest off at the close of 23 during bar 25. So I was flat after that. And then through here, I bought the high of bar 41. I thought 42 needed a second leg. I bought during bar 47. Disappointed with the follow through. I scalped out at break even. I bought the close of 54, hoping we would get momentum. We didn't get momentum. Scalped out of that one, break even, and then I had a mistake. Looking back, and I don't know if it's a mistake, but looking back, I'm not happy with it. I bought below bar 55, put a measured move down at 55. So I bought here, got stopped out there, and that was it for the day. I had to take off somewhere in here. I left. I'm not sure if I would have taken anything else. But I need to work on this right here, the delayed second legs. Oh, I forgot a trade. I sold above 52, and then I exited not directly above 53. I think I should have, but I exited somewhere in here. And so what I need to work on is these breakouts and trading ranges. They get deep pullbacks, and then the second legs are delayed. So rather than selling here, I think it's okay to sell here, but 53 is a disappointing entry bar. So I got to get out here and then look to sell a pullback, a deep pullback. Same with the rally. Instead of looking to buy up here, look to buy a deep pullback. For stop orders today, some traders might buy above 6, taking a chance, double bottom, early low of the day. High 1 above 9, high 1 11. These are reasonable stop orders. 12, 13, you could buy the close. I thought you could buy above 14, 15, 16, maybe buy the close. Always in long, buy above any bar, closing above its midpoint. And then I think selling 28 is aggressive, but okay to do. But it's a tight bull channel, probably going to get a retest of the highs. And then through here for stop orders, it's really hard with stop orders in a tight trading range like this, not ideal. So more of a limit order market through here. Maybe a stop order buy above 53. And then a stop order, I thought 56 was a reasonable sell. And I may have taken that one. I remember thinking 56 was a reasonable sell, but I had just taken 2 quick trades here. And then maybe micro double bottom, 62, you could buy, double bottom, micro double bottom. This should get a second leg up. And then another tight trading range, not ideal for stop orders. Limit order trades, sellers above 1, buyers below 2. Buyers below bar 8, buyers below 10. Buyers below these weak sell setups, 17, 20. And even buyers below 27, but 27, not ideal. Probably better to buy below 26, a stronger bull bar. Even better if you bought below 25. And if you did buy below 25 and you got trapped, you got retested. You can see bulls who bought here, trapped, retested on 38, led to a second leg down. Limit order sell above bar 30, but then a buy below 30. Buy below 33. A limit order market, sellers above bars, buyers below bars. I can go back and forth on all of these. Sellers above 34. And then again, buyers below 34 over here. 3 pushes down. I mentioned that limit order buy. There's limit order sells up here above these bars. if you're betting that the sell-off began here on 47, and there's probably sellers above 51 getting filled on 54, or these bars too, 49 or 50. And then a limit order buy at the 52 high, filled here. Maybe you scale in or just use a wide stop, and you should be fine here. Another rally, probably buyers below the first reversal attempt, which we got on 69, buyers below for a scalp. And then a tight trading range, limit order market, buyers below bars, sellers above bars. Today was a bull trading range day. We had this rally on the open, and this is unsustainable buying. It's really unusual to see a bull trend day that is this strong the entire day. But what we really got was 3 buy climaxes, bar 7, 13, and then up to 27. So 3 consecutive buy climaxes. And the most likely event after that is a trading range, kind of like this. So low probability for this to last all day, low probability to get a major trend reversal into a bear trend. 60% of the time we're going to get some sort of trading range after an open like this. And that's what we got. So it's a bull trading range day. Closed above the open. Where do we go tomorrow? I mentioned I'm expecting trading range behavior. It's a trading range on the daily chart, and that means it's going to be a trading range on the smaller time frames. We have an inside bar today, which means range compression. We have a higher low and a lower high. And I would suspect that any breakout above today or below today will fail. So probably sellers above because the bears are looking for a second leg down, but buyers below, the bulls looking for a second leg up. Not a very strong buy signal bar or sell signal bar. And again, it's an inside bar. So any breakout will probably not go very far before it retests the inside bar. Let me see if I can show a quick example of that. Here's an inside bar. This bull bar is inside this bear bar. Actually, let me do this. Not the greatest example, but bull bar inside the bear bar. Tried to break out, but retested the inside bar right away. Same here, inside bar. Tried to break out, did not go far. Same here. This looks like an inside bar. Tried to break out, did not go far. Over here as well, inside bull bar. Tried to get a breakout, pulled back deep, and then rallied. Same here, inside bar, bull breakout, but not going very far, and retested the bar. So I don't think we're going very far if we do break out of today's high or low tomorrow. All right, thanks everybody for watching, and I hope everyone has a good night.